What type of reno budget are you looking at?
There's no rental budget.
Zero?
Zero. If we want to do it as an elective, what we can do is we can do trim work on the trees, trim up the trees, and do some blacktop. So if you want to throw like 10K, 12K at that, but that's all purely cosmetic. There's nothing else that's wrong with the property.
All right, cool.
Yeah, these guys are builders, and they built this thing to last like a tank with block construction, 55-year seal seam roof. They built this thing well.
Heck yeah. All right, cool. You do not have lender fees. That's pretty awesome. Okay, property taxes. How much are property?
Ooh, Alex, you got those numbers in front of you?
Yeah, let me go look at them.
Okay, please do.
All right, this is basically a triple net. You're not responsible for utilities?
No.
No.
Zach, do you know what the meter situation was?
They are separately metered, and Judy sent me the tenant lease analysis form to show like who's responsible for what. I can pull that up real quick and put it in the chat.
Okay. What about property insurance? Is this triple net? They pay for everything?
I think it's like almost everything. Let me take triple sure of that. It's like a modified net lease. Tenant responsibilities. Come on, Seth, work with me. Looks like we're only responsible for the roof, exterior walls, and structural foundation. They're responsible for everything else, including all the utilities, and that's it. They literally take care of everything else.
That's pretty amazing. I'm going to get a 2 on that. Title insurance.
Yeah. There are 2 stipulations. The church has a 60-day cancelable lease. Like they can cancel at any time. They also have some more lenient late fees. And looks like the nail salon also has a similar situation. Early termination of 60 days notice, plus 2 months rent, and then they relieve the liability of the lease. So those are the only 2 nuances. Everything else is pretty standard.
Okay.
Again, I will send this to you guys in the chat in a second.
Okay. God, this is awesome. I don't know what the surveys cost down there, so I'm just going to go a little on the high side. Is this basically just one lot?
Yeah.
And it's got a parking lot, and there might be buildings left and right, but nothing touching.
It's a full rectangle building. They only share one common demising wall, and they have a shared parking lot in front of it. It's just 2 squares, 2 rectangles.
God, you might have something amazing. How much are you putting down? What's your loan with the seller?
Is it 350,000, Alex? I think it's 350.
Yeah, it's 350.
I don't even remember anymore.
It's around 32%.
Yeah, that's
Let me go
so
get you that exact percentage. 31.82.
all right, 31 minus. All right, let me do this. So equals 1100000 minus 350,000. So your loan is 750,000.
Yes.
Okay.
And we have a PSA drafted and everything. We're just waiting on, again, the final items, the prepayment penalty and a personal guarantee.
Okay.
Let me do the math right here so I can get you that number.
I'm close enough. Okay. So there you go. Thank you. 0. What's your interest rate? 5%? Oh my God.
5% for 5 years, interest only.
Okay. Wow. Interesting. Okay. Let's do. So what are you going to sell them for?
So that's a price point that we're still negotiable on. We need to figure out what our floor is on that. But we are, reasonably, I think 300, 350 is very much reasonable at the price point.
So what do you think of these prices?
As a retail ask, it doesn't give me heartburn, but I think we would need to lower a little bit. Again, I need to look at the markets and see, because I don't know condos. John, you did that initial preliminary search with us over the phone, but or over our last call, but it doesn't give me heartburn. What do you think, Alex? You looked at our markets.
It's not more or less the price point. It's more or less our tenants that are in it. Because my question is, if the rates are currently what they're at for leasing rates, that makes me question how qualified will these tenants be to even get financing to purchase it.
Yeah, solvency is the issue there.
So I always kind of use this as a benchmark. So our whole business model is rent to mortgage parity, right? Keeping them fairly close. So if we gave them 7% financing at 100% financing, like they wouldn't walk in with a nickel, which would not ever happen. But just as an exercise, they're going to be $2,000 a month for mortgage, and they're spending $2,000 a month for rent. So generally speaking, you could be at this 350-ish range. So I would try to go like 3.25, about 315. Let's go 300.
Do you know what the price per square foot is on those rents down there? Do you have that?
Yeah. So
If you're trying to keep it within a certain range.
They're paying that. price per square foot right now. Yeah, that church is getting a screaming deal. So
They
is the
are.
hair.
Wait, are you saying
That
dollars?
was the main thing that we saw was that, and that they're the first lease that's technically up. So we kind of looked at it and was like, well, push comes to shove, we can raise rents on them, and if not, then we can get two tenants in there rather than just one.
They're going to be hard pressed to buy at 2,400. Their mortgage should be almost double, $4,000 a month. But I mean, we're not quite done yet. Seth, you're a realtor, right?
Yep.
Okay. Do you want to? Okay, so let's see here. We don't have. Okay, so my whiz bang idea is not going to work because I can't do the math on the fly. So here's what I would look at. Add these numbers up. You got 109,000 plus, and I don't think we need reserves of that high. Call it 300,000. That number plus this number, 300,000.
300,000 plus 109?
No, I'm adding it up. So it's basically, so we always have a business plan implementation fee, and that's based on the original list price, basic 6% of 1.4, because that incentivizes us to get a better price and it doesn't penalize us when we do. So I don't know what your fees are, but we charge 6. So there's $110,000 here, and generally speaking, operational about another 200,000 here. So we got $300,000 of soft costs, and add that all up, and you've got $654,000 raise. What did you come up with for your raise?
Just $375,000 because we were going to be coming out of pocket for the entrance fees, and then we're not charging anything. We're just going to be managing the asset and taking it through the rental process and skimming the profits off of that.
Okay, I think you're not walking out of escrow with a check.
No.
You should definitely walk out of escrow with a check.
Problem is that this guy has been like adamant about zero realtor fees, nothing. Like he's come in with like, this is our terms, this is our seller finance, take it or leave it. And we've negotiated, tried working outside of it. Go ahead.
You can definitely do that. You could definitely take those terms. They're great terms, right? But you should still walk out of escrow with a check.
It seems like $600,000 is really high for a raise when we only need $375,000. But maybe I just missed something about all the other parts of it that we need to account for.
Well,
I think we're not accounting for, I think in your first part, you had 108. I don't think we're accounting for anything regarding, the business plan implementation.
Yeah. This makes sure that you get paid in the front of the deal so that everybody's happy and they can actually pay their bills while they're doing the work. I'm a big fan of this.
Yeah. We were just happy to be paid on the exit of it, but it's better.